Hi, this is Todd Baker, your certified mortgage planner, and in this video we're going to talk about the loan process, the mortgage loan process and how it works. So the first thing to understand is your normal buying cycle from the time you decide to buy a house to the time you actually do is probably going to be closer to 12 months. And during that time, it's typical for a consumer to talk to multiple real estate agents and multiple lenders and get a lot of information off the internet. And unfortunately, there's both good and bad information on the internet. Plus, you might assume certain things about that information that are incorrect. So your goal is to find a great mortgage loan officer, a mortgage planner like myself, a trusted advisor that's going to really help you fit your loan into your short and long-term financial plan and work directly with a great real estate agent that knows how to negotiate, that knows how to find you the right house, and that could really add significant value. Not all loan officers and real estate agents are professionals. In fact, I hate to say it, but about 90% of all professionals in this industry, both on real estate and the loan side, are mediocre at best. So you want to work with a great team. So that's point number one. Point number two. So what you're going to do is you're going to complete a pre-qualification process. That's the first part of the process. And that is where credit, just like I will check your credit based on your cash and your payment and your savings and your retirement plan, based on all the factors, put together a mortgage plan based on, hey, this is the kind of cash we have to invest. This is the kind of payment that not only that you would like, but that would fit into a good debt ratio for you. And then we go from there and we verify income documentation, pay stubs, tax returns if necessary, asset information. We verify the file, so I basically pre-underwrite my file. So this is you're for sure going to be able to buy a house. And then when that's done, you're now actually out really in a position to make offers on homes as they come up. But what happens once you start the loan? So once you actually start the loan, there's a series of steps that are going to happen. Number one, there'll be loan disclosures. So we get a contract in, we're going to do loan disclosures, and we're going to lock in an interest rate based on whatever the most advantageous rate is for you at that given time. I've done other videos on how interest rates work. You can refer to my YouTube channel to watch those, and it explains how they work and how they change. But the bottom line is that's when an interest rate's locked, loan disclosures are sent out, we update any pay stubs and your bank statements, etc. And then it goes through a process. So we set the loan up, we do an appraisal inspection, we order that because we have to appraise the house to determine value. We verify employment. I usually verify employment as early on as possible. Order tax transcripts, we order the title work, and there's other database searches that we have to do to make sure you don't own any other property that isn't on your credit report, etc. Then once the setup's done and your loan disclosures are done, processing or closing specialist is assigned. A closing specialist is going to double check all the documents and then work as an interface between the underwriter and you. We don't want our clients talking to the underwriters because we need to be very efficient. Now, what underwriting is, just so you know, it's quality control check. Our underwriters have to make sure that the documentation provided, the income calculation that we did, the asset verification we did meet the program guidelines, whether it's conventional or FHA or VA or whatever loan program we're underwriting to. So that's their job. And so that they're super efficient. We have very great processes at Service First. We have our processor do the communication with the borrower. That way, like I said, they can take the time to answer questions, get the documentation, and get exactly what the underwriter needs to finish your file. So that's their job. So the underwriter's going to, like as I said, I explain what underwriting does. They do a quality control check. Once it's done with underwriting, it's not uncommon to have remaining conditions. Sometimes there's borrower conditions. Like, so for example, it's not uncommon to underwrite the loan and still need a new paycheck, or there might be a gift documentation you're getting, or some kind of asset verification or something. There might be explanations on the credit report we need, something additional from the borrower, but usually we underwrite so fast that we usually don't have the appraisal in yet or the title in yet. So what happens is the underwriter goes back in and gets the final condition. Once it's done, the clear to close is issued, and then there's a document called closing disclosure that's going to be sent to you that's signed electronically. That's 3 days before closing, and then we send over the loan documents and you go to closing. So you go to closing at the title company. We're starting to be able to do e-closings as well. So that in the future, that's going to be very predominant. Right now, it's at the inception of e-closings, but typically you still go to a title company, you'll sit down, it takes about 20 minutes to sign. It's mostly just disclosures, the closing documents that matter. There's a promissory note, There's a warranty deed and a deed of trust. Those are the ones that really, like, here's your final closing disclosure, here's your promissory note, here's your warranty deed putting you on title, here's the deed of trust that secures the property for the lender, and the rest are just disclosures. So you're there about 20 minutes, and once you and the seller have signed, the documents come back to our funding department and we fund the loan, and you're done. And then our relationship for me and you really starts, because I help manage my clients' loan long term. So I hope you found that helpful. That's how it works. And in my role as your advisor is setting up the right plan, but during the process, I'm like sort of the executive that oversees all this once it goes into underwriting, so that if there's something that you need explained to you, or if there's something you need help understanding, or if there's a document you're trying to figure out how to get, I know how to do all of that, like, really well. So I still help throughout the process, and then I take back over at the end to help you manage your mortgage long term. So thank you so much. You have a wonderful day. Talk to you soon.